Here's something most people in this country will never admit out loud. They're not actually investors. They think they are. They've got money sitting in super, maybe a few shares, maybe a managed fund their bank set up years ago. But if you ask them what they own, why they own it, or what it's actually costing them, they'd go quiet. And that silence is the most expensive sound in Australia right now, because while you stay quiet, the system keeps charging you, the market keeps moving, and the years keep slipping by. So let me give you the uncomfortable truths nobody at the barbecue wants to say, the ones that actually decide who builds wealth in this country and who just talks about it. The first truth is the hardest. Nobody is coming to save your money. Not the government, not your employer, not your bank. Your employer pays 12% into your super now, and that sounds generous until you realize that's the flaw. That 12% alone will not give most Australians the retirement they're picturing. It was never designed to. It was designed to stop you being completely broke at 70, and there's a massive difference between not being broke and being free. If you're treating super as your whole plan, you don't have a plan, you have a hope. And hope has never once compounded. Which brings me to the second truth, and this one stings, because half the country is living it right now. Roughly 1 in 2 Australian workers are living paycheck to paycheck. And here's the part nobody connects. You cannot invest money you've already spent. Every dollar that leaves your account on autopilot, every subscription you forgot about, every treat yourself Friday, that's not just spending. That's a future asset you chose not to buy. The market doesn't care how hard you work. It only rewards the money you actually put in. And if nothing's left at the end of the month, the market has nothing to give back to you. This is where most people get defensive. They tell themselves they'll start investing properly once they earn more, once the pay rise comes, once the kids are older, once life calms down. But here's the brutal pattern almost nobody escapes. When your income goes up, your spending goes up to match it, almost to the dollar. People earning $200,000 a year are living paycheck to paycheck too, just with a nicer car parked out front. More money has never once fixed a money problem. Better habits do. The person who learns to invest $50 when it's hard will invest $500 when it's easy. The person who waits for it to be easy will be waiting forever because it never gets easy on its own. You build the muscle first, then the money follows. And the muscle is smaller than you think. You don't need a budget that runs your life or a spreadsheet with 40 tabs. You just need one rule: pay your future self first before anything else gets a chance to grab that money. The moment your pay lands, a small slice moves straight into investing. Before the rent, before the groceries, before the fun stuff. Whatever's left is what you live on. The third truth is the one the finance industry desperately hopes you never do the maths on. Fees are eating your future alive. They don't feel like much. 1% here, a bit more there. It sounds like rounding. But let me show you what that rounding actually does. Imagine you invest steadily for 40 years, earning solid returns the whole way. If your fund charges 1% a year instead of a low-cost index fund charging closer to 0.04%, over those 4 decades, it drains around $443,000 out of your final balance. That's the cost of not reading the fine print. That's a house deposit. That's a decade of freedom paid to someone else for doing almost nothing. And the worst part is how invisible it is. There's no bill in the mail, no alert on your phone. The money just disappears while you assume everything's fine because nobody ever told you otherwise. The fourth truth is about you. You are the biggest risk to your own portfolio because when markets fall, and they always fall eventually, something primal kicks in. Fear takes the wheel. You sell to stop the bleeding. You tell yourself you'll buy back in when things calm down, and then the market recovers without you, the way it always has. Every single ASX crash in history has eventually been followed by new highs. The people who lost weren't the ones who stayed in. They were the ones who panicked and got out at the bottom, then watched from the sidelines as everyone else rebuilt. Investing isn't a test of intelligence. It's a test of whether you can sit still when your gut is screaming at you to run. That leads straight into the fifth truth. Timing the market is a fantasy you keep paying for. Everyone thinks they'll buy the dip and sell the top. Nobody does it consistently. What actually works is almost insultingly boring. Investing the same amount on the same day, every single month, no matter what the headlines say. When prices are high, you buy a little less. When prices crash, you buy a lot more. It's called dollar cost averaging, and it beats most people who think they're smarter than the market. The beauty of it is that it takes the decision out of your hands entirely. You're not watching charts. You're not reading doom in the news and wondering if today's the day to bail. You set it once, and then you let time and consistency do the heavy lifting. Here's the sixth truth, and it's one Australians are uniquely good at ignoring. Your house is not your investment strategy. I know, in this country, property is practically a religion. But your home doesn't pay you, it costs you. Rates, insurance, repairs, interest, all while interest rates sit high. Yes, it might grow in value, but you can't eat your kitchen and you can't retire on a number on a property app unless you sell the roof over your head. Real investing means owning things that put money back into your pocket while you sleep. Dividends, distributions, assets that grow and pay you at the same time. If every dollar you own is locked in the walls around you, you're not wealthy. You're just illiquid and hoping. None of this means property is bad. It means one asset, no matter how comfortable it feels, was never meant to carry your whole future on its own. Real security comes from owning more than one kind of thing, so that when one part of your money has a rough year, the rest keeps working for you. And the seventh truth ties all of this together. Doing nothing is also a decision, and it's usually the most expensive one. Every year you wait for the right time, for more savings, for more confidence, for things to feel certain, is a year of compounding you will never get back. And there is no perfect moment coming. There never was. The market will always look too high, too risky, too uncertain, because that's what the future feels like from the inside. The people who built real wealth in this country didn't wait for the fog to clear. They started while it was still messy, while they were still unsure, and they let the years do the work that no perfect timing ever could. Money invested today has decades to multiply. Money you keep promising to invest next year has nothing but your good intentions, and good intentions have a return of exactly 0%. So let me bring it home, because I'm not telling you any of this to scare you. I'm telling you because every one of these truths is also a door. Nobody's coming to save you, which means you get to be the one who does. Fees are stealing from you, which means cutting them is the easiest raise you'll ever give yourself. Your emotions are the risk, which means calm, boring consistency is your edge. You don't need to be rich to start. You don't need to be an expert. You need to start, automate it, lower your costs, and refuse to flinch when everyone else does. That's it. That's the whole game most people overcomplicate their entire lives. Here's what you can do. Find out exactly what fees you're paying on your super and your investments. Set up one automatic investment, even if it's small, so the decision gets made without you every single month. And decide right now that the next time the market drops and the headlines turn ugly, you're going to do the one thing that builds real wealth in this country. Absolutely nothing. If this opened your eyes even a little, do me a favor and hit that subscribe button. And don't forget to turn on notifications so you don't miss the next one. I'll see you there.